if I were to advise a family member or a younger sibling or a close friend, I would say don't be house poor. Like, how great is it to have a house? But if you get a house and you can't afford the furniture, or you don't have an emergency fund, or now you can't go on a vacation or literally do anything else, yeah, sweet, you have this nice house and you're a homeowner, but that's a pretty poor quality of life.
Welcome to the Calgary Real Estate Insider podcast. This is episode 7. My name is Dustin. I am your host, and today I have Dorian Reeves with the MMG Mortgages. Dorian, thank you for coming on. Tell me a little bit about yourself.
So my name is Dorian. I live in Calgary, but I'm back and forth from Edmonton and Calgary. I'm a strong supporter of Alberta. I love it here. Our brokerage, MMG Mortgages, we're licensed in Alberta and BC and soon other provinces too. So we have offices both in Edmonton and Calgary. And we do a lot of mortgages for first-time home buyers, but more importantly, builders. So we do a lot of construction mortgages, draw mortgages, and we work with a lot of builders. That's our niche, and that's what we're known for. And I seem to do a really good job with people with low credit scores.
Okay, good to know. So you're very passionate about Calgary. You were describing before we started recording, but born in Edmonton, raised in Medicine Hat, spent some time in Sherwood Park, and now Calgary's home. Tell me a little bit about your journey to Calgary and what makes Calgary so special for you.
I started coming to Calgary during COVID for work. I had my commercial real estate license when I was living in Edmonton and Sherwood Park. And it was something I was very passionate about. And when COVID hit, all the offices were vacated, and I was forced to pivot and think about my future, especially with career. And I wanted to find something where I could work remote. Mortgages just made sense for me. And actually, what brought me to Calgary in 2021 was I used to be a photographer. It was a New Year's resolution that I had in 2020. And I didn't care about taking photos. I just liked editing. I liked the creative process behind the scenes, which kind of plays into mortgages a little bit. And so there was a lot of opportunity in Calgary, and I actually joined up with Profile Pop-Up, which is a headshot studio here in Calgary. And then I got my mortgage license. I met with Heather Manna from MMG, and I said, hey, I'm getting my mortgage license, and I'm going to be doing this soon. And she was the first connection that I actually made in Calgary. And I got lucky because she was the right person to know. So I made the move fully, I think it was November 2021, and I've been here ever since, and I haven't looked back once. However, Amazing. My family's still in Sherwood Park, so I'm up there every month or so.
Of course. But yeah, Calgary's a great city. I mean, we share that passion. For those that aren't familiar with MMG Mortgages, do you want to give a little intro to that company and what they do? If they're in specialty.
Yep. So MMG Mortgages, we are, as I mentioned before, we're licensed in Alberta and BC. We do work in Saskatchewan and Ontario as well. I believe we're known for doing a lot of construction mortgages. So we work with a lot of new developments, large builders. We do a lot of draw mortgages. And we typically end up doing we tend to do the complicated stuff, like draw mortgages and some construction mortgages. As I mentioned earlier, I tend to specialize in people with lower credit scores or variable income. I've developed pretty strong relationships with a few prime lenders, and I get stuff across the line that other brokers can't. So I've made a name for that for myself. And our brokerage, I think we have about 60 or 70 agents. Most of them are in Calgary. Some of them are in Edmonton. And a few across Canada, if I'm not mistaken.
Okay. And you know Calgary market fairly well now. I mean, I always love to hear from a mortgage broker's perspective because, it's one thing on the buyer side as a realtor. It's another thing on the finance side to see kind of what's happening behind the action, if you will. What's one thing that's, is not in the news that you're seeing that a new buyer might be surprised at?
Well, if a new buyer is paying attention to realtors on social media, they'll hear a lot that there's a couple different markets going on. There's a buyer's market and a seller's market happening at the same time. Although that's not ultra rare, it is certainly unusual. And so a lot of people, especially first-time buyers, they're afraid to buy because everybody is saying, don't buy, the housing market's about to correct. That certainly is the case in certain spaces like apartments and condos, maybe some row housing, but in the upper tiers, and I'm sure there's going to be realtors that are going to ridicule me for this, but I think it's like 700 plus thousand. It seems like there's a different market going on. So properties are still selling really quickly, especially in the luxury space, but it has to be a turnkey home or in an A plus neighborhood or location. So it's kind of interesting. A lot of people are hesitant to buy right now, and a lot of people are taking advantage of the market. Interest rates have been decently stable for the past 6 months or so. They did have a big drop at the beginning of the year, and they started to climb back up, especially the fixed rates with the rising bond yields and whatnot. But there's a lot of people waiting on the sidelines right now. That's what I'm seeing. Sidelines and people who are just ready to go for it. So it's a bit of both.
Yeah, and in your world, obviously dealing on the financial side of things, like I'm sure you're pretty privy to consumer psychology or decision making, and you even mentioned people kind of sitting on the sidelines and waiting. What's the sentiment? I mean, I guess it's a split market for those kind of in the under 700. Maybe there is a little bit of I'm not sure what's going to happen with rates, or Trump just imposed some new tariffs yesterday. I mean, who knows what's going to happen with prices? I feel like there's a lot of uncertainty. What are you seeing from buyers who are just kind of sitting on the sidelines? What's the reason?
The reason is they're waiting for prices to drop, which is the age-old phrase. I actually have a few buyers from the past few months that they got pre-approved in hopes of buying something next year or at the end of this year. And I don't know, maybe they got excited. I'm not sure exactly what happened, or maybe they worked with the right realtor, but it seemed as though they realized that they could keep renting for the next year, 6 months, 2 years, and the amount of money that they would spend in rent might not be worth it, as opposed to just buying and starting to build equity right off the bat. And so that's what I noticed, is a lot of times people are getting pre-approved right now for the next 6 months. And as soon as they get that pre-approval, they're on the market tomorrow. I guess that's just buyer psychology. People get it. But a lot of times it's like, okay, you might spend 15 grand, 20 grand a year on rent. But are the housing is the home price going to drop 20,000 enough to make it worth your time to rent? Or should you take advantage of the market right now and spend the same money? So I think that's kind of the name of the game right now, is waiting for the prices to drop. Because interest rates that buyers don't, I don't know, it's never, mortgage interest rates don't seem to be an issue for a lot of people that I'm chatting with right now. Of course, they're in the four, like mid threes to mid fours, but people don't seem to be too concerned about the interest rates. It's all about the home prices.
Right. So regardless of if rates are going up and down, because that's another uncertainty piece that we hear, right? Is people are unsure or maybe waiting for rates to come down. But I think we're at a bit of a could go up, could go down, kind of depends on what's going to happen here. So that's really interesting. What are some of the, from the buyer side, what are some of the biggest mistakes that they're making? I mean, you kind of mentioned like some people can sit on the sidelines and wait, and maybe you missed the deal. What are some of the other kind of big mistakes that people make when they're going through that process?
First and foremost, people are afraid to get pre-approved because they have, they believe they can't get pre-approved for what they're looking for, or maybe they just started a job 3 months ago, or maybe they think that they have to pay off their car first. So they wait years to get pre-approved. A lot of times people are shocked at what they can get pre-approved for. Like me, when I bought my first car, I thought I couldn't afford a car. And I thought, oh my gosh, I'm going to have to wait 2-3 years to save up so I can buy it in cash or put 20% down. And then finally, the day that came, that I realized I needed to buy a car ASAP, I was like, oh my God, I can actually get something way more than I thought I could. And I had no idea. And I don't know why I went wrong. I think that happens a lot with buyers, is they're just afraid to show their finances and they're afraid to see what they're pre-qualified for or pre-approved for. Remind me your question again. What was the...
Yeah, more along some of the biggest mistakes that the buyers make.
Yeah, so the biggest mistake, they don't realize that they can get pre-approved for X amounts. Another huge mistake that I've seen so many times this year, especially even with my friends that I've done mortgages for, is rate holds. A lot of people don't know what a rate hold is, but basically when you do your pre-approval, you can submit it to a bank or a lender of your choice for a 120-day or 130-day rate hold. Basically, that means you lock in that rate for the next 120 or 30 days. There is no commitment to that lender. So if you decide to not buy or you switch lenders, there's no commitment, but it's the lender's commitment to the buyers. A lot of times we advise it in markets where the mortgage rates are going up. So like right now, there's a lot of volatility. It could move around. So you lock it in. And by the end, and you just have to make sure that the closing date is before the 120 days.
And just so we're clear to anyone who's new, closing date being the day that you take possession.
Yeah, the day that you get the keys, not the condition of finance. The other thing about rate holds too is people are afraid to lock in a rate because they think they're going to be stuck with that rate. But if you got a rate hold for 4% and rates drop down to 3.6%, you still get access to the 3.6% rates. You're not locked or glued to that 4%. So I think there's a bit of there's not enough knowledge on rate holds, and people might see it all the time, but people are afraid of commitment. But it's not a commitment. It's the bank's commitment to the buyer. It's there to help them. And I've had a few friends and clients this year not get rate holds, and then they finally go to put an offer in, and their rate is like 20 basis points, 30 basis points higher, and they're kicking themselves in the butt. And there's nothing we can do at that point.
Yeah. So big recommendation is obviously, number one, get pre-approved early before you even start your search, right? Understand what you're going for. Number two is make sure you lock in that rate. And if you do lock it in, you're not locked in. The bank is locked into you on that rate.
Yep.
Yeah.
Another mistake that I see, not to ramble on, but there's so many buyers that I chat with that tell me that they just started a new job or they want to pay off their car payments first. A lot of times, if you are in a full-time job or a salaried position and you have one pay stub, like you've been working there for 2 weeks or a month, there's a lot of prime lenders that will accept that. You don't need to be working there for 6 years, 1 year. Sometimes that is the case for sure, but there's a lot of times where they will still use that full annual income based on your letter of employment. And the other thing too is with the car payments, it doesn't matter. Well, it does, but it doesn't matter if you have a 50K balance or a 10K balance. What matters is the monthly payments. So if it's a $500 monthly payment, it's not going to change unless you go to refinance your vehicle. And it doesn't hold people back as much as the fearmongers say it will. It happens all the time. They think they can't get pre-approved because they have a car. And it's just not true at all.
So what are the banks looking for? What is the most important aspect when someone's putting together an application to buy a house?
Well, in my opinion, and I could be wrong, but this is just what I see, income comes first. So getting the highest pre-approval amount, income is king. After that, it's going to be, I should condition that to credit score. Credit score does matter for sure, especially in the prime space. However, the rule of thumb is your credit score should be over 680 to go with the prime lenders, and sometimes 700, sometimes 720. But last week I got a client approved. They had a 539 Equifax score, and I got them approved with a prime lender because their TransUnion score was higher. Their TransUnion score was in the mid 600s. So even though they went to the bank and they went to other brokers and they all said, oh, you can't get approved until you get your credit score up, that was not the case. So it is important, but there's ways around it. So income comes first, pending credit, and then paying off debt has a higher impact than putting more down payments. So if you have an extra 10K to put for down payments, it would be better use putting towards paying off debt, as long as you have the minimum down payments. It tends to have a higher impact on the approval amounts.
Right. So as an example, you've got a $10,000 car loan. Instead of taking that 10,000 and putting it on the home, you pay off that car loan, free up that monthly cash flow, and that kind of improves things for you.
Yeah, and I've had it in the past. Last year, I don't know if I'll get in trouble for saying this, but of down payments, if you're getting a gifted down payment from someone, it has to be a family member, an immediate family member. However, if you get a gift to pay off a car or, personal debt, and it's not going towards down payment at all, that's also a solution that people don't really consider. And the only other thing I'll say about down payment versus debt is a lot of times people are putting down like 15%, 20%, 30%, but they don't need to. And of course, it pays off the principal right off front, so you pay less interest. But maybe they go to a mortgage broker or a bank and they're only pre-approved for $600K. Sometimes it's because they have a lot of debt. So with the client's consent, I will theoretically pay off some of the debts. Maybe it's a $10,000 line of credit or a $5,000 credit card or something. And they still have a considerable amount of down payment. Instead of getting a $600,000 pre-approval, that might get bumped up to $660,000 or higher. So it's really important to be working with the right broker.
Okay, so you can get somewhat, if creative is the right word, but you can structure it in a way that makes a lot more sense for the buyer.
100%, yeah.
Yeah, okay. And I mean, what are you seeing in today's lending environment, and how should people be approaching buying their first home? Should they be going for that high stretch, or what do you recommend? I mean, the one term I heard from a broker, which I liked, which is, live your payment, right? So where do you kind of land in that? Is it worthwhile to kind of stretch for your first one and knowing that your family's going to grow, and instead of having to trade in 4 or 5 years? Where's your perspective on that?
I think it's very subjective to the person. I would say 80% of the buyers that I pre-approve end up going pretty darn close to their max pre-approval limit. But maybe that's because it's in they can afford it, and they're responsible with credit, and they're responsible with their money. But I do see most people buying at the top of their limits. If I were to advise a family member or a younger sibling or a close friend, I would say don't be house poor. Like, how great is it to have a house? But if you get a house and you can't afford the furniture, or you don't have an emergency fund, or now you can't go on a vacation, or literally do anything else, yeah, sweet, you have this nice house and you're a homeowner, but that's a pretty poor quality of life. But still, nowadays people love to spend and they love to show off. I think if you're going to spend at the top of your budget and you're going to stretch it pretty thin, at least get the deal of a century and really work with the builder, or find a great realtor who's going to get you, a smoking hot deal. But apart from that, I would just advise, consider life, and vacations and dates and stuff like that as well.
Yeah, it's not
Property
just about
tax. Don't forget about property tax.
Yeah, all the unknowns. So, I mean, I'm sure you work quite a bit with realtors, but how important is that kind of partnership between a broker or a realtor or a builder like us?
Incredibly important. For me, it's one of my primary sources of referrals, and maybe I shouldn't talk about that because no one likes to hear about referral sources, but a relationship is important because of trust. And so when I started doing mortgages, I found it incredibly hard to build relationships with realtors and builders because they've already been working with someone for 20 years. And not only have they been working with that person, but that person's also a family member or like a friend from high school. But over time, I've found that, like, for me personally, if I have a close friend or a buyer that is interested in purchasing a property, I'm not just going to refer them Jane Smith or John Smith, because there's a lot of people, there's a lot of realtors out there, there's a lot of area sales managers out there. I would prefer to have somebody who's very honest, sincere, and is not going to try to screw them over or, work in their best interest. So for me, relationships are incredibly important, because if I'm referring a client to a builder or a realtor, I would hope that they can trust that I'm not trying to screw them over. I'm trying to get them really good service that they'll, it's reflected in my business too. So partnerships are really important. I'll just ramble on. Feel free to cut it out. But the other way around, if a buyer is working with a builder or a realtor, it's incredibly important for them to have relationships with the bank and with mortgage brokers too, because not all brokers and banks are cut from the same cloth. And there's a lot of trust that's involved. Trust for the fiduciary obligation, and trust that the broker is going to take good service and get them the higher pre-approval amounts or a better mortgage rates or a better solution. So it is really important.
100%. And, I haven't been in the industry too long, but, my short time, I've realized that there's a lot of people out there who, it's very transactional, right? It's not necessarily relationship focused. And so that trust is a really important piece, and it's just as easily lost as it can be given. And particularly, we're a builder. I think a lot of times the trust amongst builders can be challenging, just given, the new construction and the turnover process. And so being able to find those trusted relationships to be able to refer business is really important. And particularly, for yourself, who's essentially building up your own business from scratch in your kind of niche market. That referral is probably a huge part of how you get your new business. And so those relationships are a pretty important piece.
Oh, absolutely.
One of the things that, has been interesting to view of Calgary in the last couple of years is just the amount of new people that continue to come to this city, and both from international, but also interprovincial. Alberta continues to attract the majority of people from other provinces. How do you think this growth is going to impact affordability, home prices? I know you don't have a crystal ball, but where do you see that going in the next couple of years?
Great question. Things keep changing as per the government, but the population growth that we've seen for the last 4 or 5, 6 years was substantial, especially in Calgary, and now a lot of them are moving to Edmonton. And in doing so, demand for rentals and demand for homes just shot through the roof, because everybody who moves here needs a place to live. Obviously, that population growth has slowed quite a decent amount, but it's still coming in. Calgary's an incredible place to live all over. I honestly think Calgary's the best place to live in all of North America, if not the world. I'm very passionate, and I will back that. But yeah, people are going to continue to move to Calgary and Edmonton no matter what. I know there's a lot of rental purpose units coming to market, and that has come to market this past year. But even by the end of the year, I think it's you might know better than me, but it's between 16 and 19,000 units. And on top of that, there's a lot of people renting out their bedrooms and people renting out their legal suites. And there's attached townhomes now, and there was that whole blanket rezoning thing. That's all going to have an impact on pricing, and I hope that it continues to have a downward pressure on pricing. So in the next couple of years, what I truly think is going to happen is the market's going to come in waves, and maybe it won't be such a big spread between the buyer and the seller market, where it's these large swings, but I think it's just going to be a little bit more up and down more frequently. Yes, more frequently. So instead of going like this, it's going to go kind of like this, where the market's going to get hit with the wave of buyers, and then it's going to get hit with the wave of sellers, and then it's just going to keep doing that. But over time, in the next 10, 20, 30 years, the prices are going to continue to increase, but it might not just be these huge swings. So I'm optimistic about the future. I think buying a house now in 20 years, you're going to be laughing. Still, the world doesn't know about Calgary as much as they should.
Do you? I appreciate your passion for Calgary. I share the same passion. Do you work with a lot of investors?
I don't actually. Well, kind of sometimes, but they're not my primary clients. Um, yeah.
Just curious, like, on the few you have worked with, right? That's kind of something we haven't really touched on, but I know when demand moves to an area, investment is pretty quick to follow. So I know that's been one thing that Calgary has sort of seen a bit of a shift in, is a lot more investors moving in and
Yeah.
buying. You saw the Toronto and Vancouver markets over the last, call it, decade, and the price appreciation that happened, and there certainly came an expectation of that quick appreciation for investors. So I'm curious, from the investor sentiment, if you're seeing something similar in Calgary, where there is that expectation on home prices continue to rise, or if we're seeing more kind of cash flow investors come in. Yeah, any insights you have to share would be great.
I think as far as investors go, yes, there's a ton of investors in Calgary. I think because the prices have increased dramatically over the past few years, they started to look for um, better value. And maybe they're looking in Edmonton.
Mhm.
Maybe they're looking in Red Deer or the smaller towns where there's still a lot of opportunity to buy low and sell high down the road. There's a lot of investors from Toronto, from BC. So that's always going to be a thing. And I think Danielle Smith just announced, I think it was today or yesterday, that they're building, Meta's building a $13 billion data center in Alberta.
Mm.
That's great news for investors. We love the tech space. And that's going to continue to build investors' confidence in Alberta. And hopefully they'll want to call it home, as opposed to Toronto or as opposed to Texas or wherever they might be coming from.
Mhm. And in that space, as far as the investment goes, is there a certain product type that's a little bit more attractive, or segment of the market?
Well, I'm not too dialed in on that, but I would say investors tend to be, if it's going to be a property that they can flip and sell for higher, for sure. But it seems like they want multifamily or something that has a legal suite or something that they just can, uh,
Mhm.
a bigger lot with more units. That's ideal.
Yeah. And I mean, I guess that really depends on who the buyer is and what they're looking for, and again, as an
Yeah.
investor, what your expected return is. I think from the cash flow side, that's been traditional Calgary, because we haven't had that huge price appreciation. But again, we're starting to see a different kind of investor come to town, which is interesting all in and of itself.
For sure.
Well, so if you are advising someone who's potentially interested in investing, or let's say it's a homeowner itself, obviously being on the finance side, you get to see the inner workings of people's own finances. And when I was in banking, I always find that part fascinating, to learn kind of how people are either building wealth or quietly eroding it based on their kind of habits. What's something that you've seen, or someone that wants to build maybe some long-term wealth in real estate? What financial habits, what decisions, what are things you're seeing that people are doing that are kind of putting them in the right direction?
Uh, well, they ask questions for one. Is this the best? Is this the best mortgage product for me? However, people don't ask that question, but they ask it exactly. They ask it in different ways. Uh, People with strong financial habits, they're asking questions like, what are the prepayment privileges on this mortgage? How much can I pay off of this mortgage each year without being penalized? Um, do I have to go with the 25-year amortization, or can I bump that down a little bit? Um, the strongest investors that I've worked, not investors, but people who tend to be financially savvy, they're asking about home equity lines of credit or HELOCs. There's a lot of benefits in opening up a HELOC, even if you're not going to use it for the first couple of years. And there's a lot of tax deductions too if you're using HELOC money to purchase something that's income generating, that you can deduct the interest payments from your taxes. I'm sure an accountant's going to be all over that one. But yeah, so it's HELOCs. It's people who are interested in paying down their mortgage quicker with prepayment privileges. And it's people who might not want to pay the CMHC mortgage insurance and put down 20% or more. even though it might be slightly higher interest rates. So yeah, those are the big three things that I'm seeing from financially sound individuals.
So, I mean, that answer leads me to another question, which is, what are the questions that people aren't asking their mortgage broker that they should be?
What's the Smith maneuver? Tell me about the Smith maneuver. Never been asked that one before, unfortunately. But they should be asking, why do people get a HELOC? What's the whole purpose of getting a HELOC? Is the lender that you're getting me approved with, is this a lender that I'll want to be for the next with for the next 20, 25 years? Another question I would love to be asked is, can you tell me a little bit about Manulife One? It's a mortgage product that can be incredible for usually high net worth individuals or people who are financially responsible. But just asking more questions in general about their mortgage is a really smart thing to do, and it's very easy. And we, just like anybody, I'm a mortgage broker, and I love to chat mortgages. Even though it might be so boring to 99% of the population, I would love to ramble on and tell the client everything I know, because it's fun.
That's something you live and breathe, right?
Yeah.
Another aspect of your business, I know something you've been working on, a bit of a passion project, if you will, but Realtors Give Back. Tell me about that program.
So it's an ongoing charity networking social series, and we just had our first event about 3 or 4 weeks ago here in Calgary. What's so great? So in sales, mortgages, real estate, it's really important to network, and I go to networking events as often as I can. But a lot of times my social anxiety just goes through the roof, and I'm like sick to my stomach the night before, even though I'm not, it's going to be completely fine. However, in my own personal life, I love to host events and host my friends and introduce people. So I thought, why can't we create a networking series of different events around Alberta where people who come actually enjoy it, and it's not awkward, and it's something that they want to be a part of, and they can meet other industry professionals and network. And more importantly, can we do it with a cause? So we partnered up with End Violence Everywhere. It's a charity organization or foundation. And we're open to working with other charities too. But people who are attending these events, they're meeting everybody in the city. Hopefully they're winning friends as well and doing business with the people that they're meeting down the road, all while giving back to charity. So basically, it's a fun charity event that has to do with networking and getting to know your community.
Very cool.
Yeah.
And what has been what was the first charity? Why did you pick them?
I was introduced to them by a good friend of mine, Tarek, who is actually the corporate event coordinator at Greta here in YYC, Calgary. I picked them because their foundation is all about helping people who are victim of intimate partner violence, IPV, and domestic abuse and family violence. And it's a housing initiative. Like, they do a lot of things, but they help people who are victims have a voice, a place for them to seek support in a community. And they're also advocating for these people in a government level. Like, they're speaking out about it. They're making it known where, because a lot of times these people are kind of left in the dark, or people don't want to listen to it, whatever the case may be. So that one, it didn't hit. I haven't experienced that, but I have a lot of empathy for those who do. So it was great to be able to put the money towards that. And actually 100% of the proceeds went to it, and we raised over $6,000, which is pretty incredible.
Amazing. Absolutely. Well, I look forward to following along and seeing, what you guys can do next. And I'd love to attend an event in the future and contribute to the cause. Last question for you. Where can people find you?
People can find me on Instagram and TikTok at Reeves Mortgages, and they can text me at 587-575-6362. Instagram and TikTok seems to be a funnel for most of my business at this time. and it's a place where they can get to know me and watch me do some silly videos.
Amazing. Well, Dorian, I really appreciate you coming on. Thanks so much for the chat, and best of luck.
Thank you so much. This has been an absolute pleasure.
Awesome. Okay, until next time.
Cheers.